series is to protect you so that you know what not to do when you're going out and buying a house. So rule number one, probably the most important one, please, 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 or number one on how to lose a mortgage, do not quit your job. Please just don't. Don't quit your job. We have already verified your employment. We've already verified your income. That's how we qualified you for this home. If you change your job, change your career, this also includes starting your own business in this process. So please don't do any of that. Whatever income you qualified on, keep that normal throughout the entire looking process and closing process, okay? So how to lose a mortgage in 10 ways. Number one, change your employment in some shape, way, or form. Now, I am gonna do a little asterisk up here somewhere, caveat. If you have a great opportunity to better yourself, to better your family, and you are looking at changing and advancing your career, always talk to your loan officer first. There are certain situations where we can change a job in the middle of the process and still make it work. But if we're going off of how to lose a mortgage in 10 ways, rule number one would be quit your job, change your career, and start your own business. So don't do it. Okay, how to lose your mortgage number two. Numero dos. Please don't go buy that new truck, that new car, go through your midlife crisis and need that fancy little sports car in the process of buying your home. Reason why? Most people finance their auto purchases. We can go on a whole nother tangent about that. I don't feel like you should ever invest in a depreciating asset, but if you are going to buy a car, do it way before or do it way after you go and buy a home. Got it? Don't buy a car in the middle of the process. Do people want to know why? People probably want to know why they shouldn't buy a car or a truck or their fancy sports car in the middle of buying a home. This is why. Number one, most dealerships, when they are trying to finance this new purchase, don't necessarily care if they run your credit 9 times to try to find you the best interest rate to fit that monthly payment that you said you would not go over. Car salespeople are truly salespeople. They want you to buy that car. So if you said, I do not want a car payment over $750, they are going to shop your credit and your purchasability with as many lenders as they can to get your monthly payment with that car where you want it, so you're gonna buy it, okay? And then number two, we qualified you on a certain number of liabilities that you already have. Should you add something to those liabilities, it could throw your whole purchase into a over debt to income ratio. I don't want to get into too much mortgage jargon. It's another debt that we didn't count for before, so don't do it. Okay? So how to lose your mortgage number two, go buy a car, truck, sports car, anything that's expensive and financed in the middle of the house buying process. Okay, number three, your credit card debt. Don't go shopping and rack up more debt or miss a credit card payment while you are in the process of buying a home. We understand that things happen, okay? You might need to, let's say you currently own a home and your AC goes out. Most people don't have anywhere from $8,000 to $15,000 to go purchase a new unit, so you may have to finance that. Please, 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 if there is a circumstance that needs to be financed on one of your credit cards that you currently have, talk to your loan officer before you go and do that. We just want to make sure that by financing that purchase, it doesn't affect the debt to income that we qualified you on to buy the house. So don't rack up credit card debt. Also, don't miss a darn payment on those credit cards. Make sure that you're paying all your bills on time. The credit score that we qualified you on would be affected if you should increase the credit usage that you have or miss a payment on one of those credit cards. So, number three, the third way to lose a mortgage is to increase the credit card debt that you have or miss a payment on one of the credit cards that you currently have. Cool? Got it? Good. Please do not spend the money that you have put aside for your down payment. Now, this also goes towards if you are getting a gift. If you get a gift for your down payment, please do not touch that money. Don't spend it. We have to verify in your bank account that you have the money to put down on this house, not just for your down payment, but also for any prepaids, escrows, or closing costs that you have to pay out of pocket. So if you get a gift or you've been saving for your down payment and closing costs, do not spend it. We have to verify that it is in a bank account before you can close. Rule number 5 in our little mini series of 10 ways to lose your mortgage, which sounds very negative, but it's truly not negative, okay? Number 5, if we ask you if you are divorced or have any child support or any alimony obligations, we are asking you this for a reason. So number 5 is, please do not omit any outside debts that we ask you specifically about, thinking that you're gonna get one over on us. The reason being is, alimony, child support, spousal support, anything along those lines is considered an obligation, and we have to include that in your debt to income calculation, meaning it is a monthly obligation that we have to include. And there are some caveats about this. If your child is turning 18, or we can prove that your spousal support is going to end in a certain number of period with an official divorce decree or some sort of court order document, blah, 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 blah. Mortgage jargon for, unless we can prove that you don't have this obligation, we have to include any alimony, spousal support, or child support. Got it? So don't tell us that you don't have it if you truly are paying for it. We're gonna find out about it somehow, so just let us know. Have all your cards on the table so that we make sure that we're covering anything that we need to address up front rather than 5 days before your closing. So rule number 5, don't exclude any liabilities that we need to know about. Got it? Cool. Number 6, do not, and I repeat, do not go to Nebraska Furniture Mart, take advantage of their 0% interest sales on Labor Day so that you can buy all your furniture and all your appliances before you move into your damn house. Sorry, I shouldn't say damn, your darn house. The reason being is, if you buy this, you finance it, and they check your credit and your credit drops, guess what? You might have a beautiful washer, dryer, fridge, double oven set that you don't have a house to put in. Because if you are that close on your qualifying ratios and that puts you slightly over, it could disqualify you from buying the house. I know that seems like a great exaggeration, but it's not. It's happened, and we don't want it to happen to you. So do not finance or buy big purchases. That goes for everything: carpet, flooring, the new windows that you want to put in, whatever it may be. Do not buy anything for your house until you have closed on that house. Got it? Cool. Number 7 in the ways to lose your mortgage, the 10 ways to lose your mortgage, number 7, this is how you do it. Go and inquire about your credit with all these different creditors. Maybe you're thinking about proposing to your fiance and K Jewelers wants to run your credit to see if you can finance it. You're not buying it just yet, you know, that might be too much commitment, but you wanted to inquire if you could actually finance that ring and they run your credit. Don't go run your credit with different creditors while you're buying a house. And the reason being is, every hard inquiry that you acquire will affect your credit score, okay? And if you are right on the cusp of qualifying, and your loan officer may or may not disclose how on the cusp you are, but if you are on the cusp of qualifying and then they do a recheck just to make sure you haven't added any new liabilities, that could disqualify you from your mortgage. So, to summarize that whole little thing, don't go running your credit with different creditors while you're buying a house. It could drastically affect your credit score. So, what are we on? Number 8? Number 8? Yeah, number 8. Number 8 is, don't have undocumented funds entering your bank account. Don't put money that you have under your mattress in cash into your bank account without some sort of paper trail. Got it? So don't move your money around that you're randomly figuring out that you have, whether it's in a safe, under your mattress, your grandma left it for you in the backyard, you dug up, you found something. I don't know what it is, I've heard it all. Don't put cash into your bank accounts because we will see it, we will ask for it, and we have to document it. It's just the way mortgages work. So if you have money that you are putting into your bank account, I'm not saying that you can't use it, but we have to have a very legitimate paper trail on how to source that money. And the reason being is we want to make sure that you are not borrowing these funds for your down payment, or they came from some sort of money laundering scheme to get it illegally into your bank account. I don't know what it is. We cannot use undocumentable funds, okay? So I am not saying that mattress money is a bad thing. What I am saying is, if you are going to use mattress money for any of the closing costs, prepaid items, down payment, and buying your house, what I need you to do is get that money into your bank account well before you decide to go and apply for a mortgage, okay? That is called seasoning of funds. So make sure that you get that done before you start applying for mortgages. If you put cash into your bank account, please run that by your loan officer well before you do it and have a discussion on how we're going to document it, things like that, okay? Now, any other deposits that are non-payroll, meaning I can't see that it clearly came from your place of employment, we will also have to verify. So make sure that you kind of keep your money still. I hate saying that, but quiet your bank accounts. Don't move money around. Don't try to put it all in one place for closing. What we prefer you to do is before you move large chunks of money, always run that by your loan officer, okay? Number 9 is don't change bank accounts. Now that we've already talked about money in number 8, number 9 is please don't open a new bank account in the middle of the process of purchasing a home. And the reason being is, in most cases, Clear Mortgage can have some exceptions to this, but in most cases, lenders do have to view 2 months of your bank statements. If you don't have 2 months of your bank statements, we have to go through a whole gamut of hoops to jump through just to make sure that we can source where your funds are coming for any funds due for a down payment or for closing or for prepaid/escrows, okay? So number 9 is don't change bank accounts and don't open new bank accounts. Like I mentioned in number 8, if you are going to be using funds that aren't documentable, please, please, please do this or open your new bank accounts or change your bank accounts well before you decide to go and apply for a mortgage to buy your new home. Number 10, do not execute on any liabilities by co-signing for someone else. So don't sign for their car, don't sign for their student loans, don't sign for their own house purchase if they need a co-signer. Just don't do it. If you're buying a house for yourself, don't sign someone else's debt. Look, I get it. The mortgage process is complicated. We know that. We're just trying to make it clear.